COMS bulls. This is a warning for you guys. Please watch the video as I will explain why my thesis is favoring the downside. Okay, let's get started. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a COMS technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. So we are definitely looking at COMS here in the daily chart, and you can see this is absolutely an undeniable bearish setup here. This last candle barely returning anything from which it has lost thus far. So this is set to a continuation to the downside. Now we're going to start off with a very simple chart here just so that we can see what relevant targets we have. First of all, right now the support that we found is currently at the 1.272 at about 9 cents, 9.16, and this is likely to fail. And the reason why I can say this is because there is a small gap right down here that's well within the 7-cent area, and it also has confluence with the knot 618 at 7.27, 7 cents. Okay, so usually when we have something like this here that has confluence with a 618 ratio, which is a golden mean, we tend to want to take the trade down to those levels. Okay, so this is potentially going to reach down to these levels within the next day or the following day. As you can see here, these are whole day candles here, so it has taken 3 days to get to this level, so we can only assume another day or two, potentially 3, to reach down to this level here. Okay, so now let's go ahead and move on to the next chart. This chart in particular is, sorry about that, let me just go ahead and get rid of that fib. Okay, so this in particular is the chart that we've been looking at as far as the triangle that the right angled triangle or descending triangle that we found a breakout from. And in this breakout, I did say that this was a premature breakout. It could be the fourth test, which would be awesome, but a retracement back to the confirmation or validation of this newly converted resistance into support was absolutely needed, and we have since failed it. Now, and it did come back in 4-hour candles and tested that resistance before a continuation onto the downside. Another thing to note is that we do have now the 10-day simple moving average and the 50-day simple moving average as a form of resistance. As you can see, this candle here actually went all the way down, came back up, and closed it right at that 50-day simple moving average, and now we are continuing to the downside. The next candle has printed right there, a tiny little candle there. So this there could be a drop for sure too. If I can give you a range, first of all, for sure we can see a range starting from 7 cents, 7.28, and based on this 200-day simple moving average and the 100-day simple moving average, you're looking at, let's see, 8.28, so 7.28 to 8.28, which would be essentially the area for us to use as a form of support. Now that would likely be a very short-term bounce before finding again the 50-day moving average and then failing that, and then using our gap closure from a previous gap from the past. You know, I usually keep these gaps in place so for future play. I don't let them go too long, but you know, only when it's relevant. Okay, so yes, please definitely watch out for that. And if there is the potential to even take this to the lowest level, we do have about 5 cents, 5.49 as a form of absolute bottom support for this descending triangle. Okay, now let's move on to the next chart, as I did find some divergences for us to evaluate. Okay, so this is the divergence chart that you're looking at here. Divergence is usually divergence is usually the opposition of price action versus momentum. In this case, we are using relative strength index, which is a momentum-based indicator, of course. So now these 3 drives that you're looking at here by these yellow lines that I drew are 3 drives of of hidden bearish divergence, which you can find right here. Hidden bearish divergence happens when the price action is making a series of higher lows, and the the RSI signal is making a series of higher highs. So in this case, we do have, I mean, if you want me to zoom in like this so you can see exactly the pivot, there you go. So yeah, we do have the drives going to the upside while price action is going to the downside, which signals us hidden bearish drives of divergence. So now let's open up a multi-pane so that we can see how immediate our capitulation event or downside could be. For the new viewers, new listeners, I definitely have the RSI properties on a diagram here for you so that you can see 1, 2, 3, 4, 4 zones which are located right over here. Okay, so let me just make this like this and continue on. Okay, I just have a little bit of an OCD thing here. Yeah, so these are the 4 zones and right over here. So now let's open up the 30-minute short-term or immediate short-term time frame to gauge that bias. Okay, so 30-minute RSI is in absolute grips of the bear strength percentile, and the moving average is suggesting a continuation to the downside aggressively. So now the 15-minute time frame is also suggesting an aggressive downside well within the grips of the bear strength percentile as well. So we are likely to find an immediate downside. So let's see, this is going to be the bi-hourly RSI, and the bi-hourly RSI is slowing down in its pivot, which could signal a potential sideways trading followed by a continuation to the downside, since the moving average is still suggesting a downside continuation. The pink line represents the moving average, and the purple line represents the RSI signal. This pink line is a 14-day moving average, which is typical for an RSI indicator, and it's fixed at this time frame regardless of the time frame that you're on within your chart. Okay, so now the 6-hour RSI is approaching the deep areas of the bear weakness percentile. We're getting a hint from the moving average suggesting a continuation to the downside. This is likely to be gravitated into bear into the deep areas of the bear weakness percentile before bear strength. Okay, now the daily time frame, since we already saw the 12-hour divergence chart, is suggesting an aggressive downside as well, and it has since made a bearish cross below the moving average, which is usually a bearish signal and a signal to continuation for the way down. As you can see, the current position of the daily RSI signal is well in the shallow areas of the bull weakness percentile, which means that we're going to be gravitated right into bear weakness. Okay, so there is definitely some downside to come for COMS. If we were to take now an inverse fib from our current position, let's just take a look to see what we have. So from the very low of that swing low from today to, okay, so yeah, we do have some. I mean, first of all, this 1.618 at 486 has confluence with these candles here, and also the support bottom from this larger gap that we had filled. That we still actually are yet to fill, and the reason why we haven't filled it is because this is how large the gap is, and you can see that the lowest point has been this thus far. So it is safe to do something like this. So within that zone, I mean, honestly, I can just modify it like this and it'll be okay, right? So we do have the 1.618 well within this area here, which is dangerous because the 1.618 is usually an area where the sentiment likes to take the trade to, or price action to, and also this area here of the not 618 being in confluence with this gap as well. So there is the likelihood to where we can reach these areas here. If we're gonna do some type of regression trend line rejection type thing, it would be more than likely. Let me see. Let me just make sure that I am drawing this correctly. I know this is very discretionary, but I would like to catch the precision here for you guys. Let's see. Okay, so yeah, unfortunately it would be something like this. So in the next day candle, we do have a support from an ascending or a type of regression here, an upside regression. So this can also be a potential support. It's just a line though. There's really nothing to it. These okay, well, now opening up the moving averages, you can see right here that first of all, the 10-day simple moving average and the 100-day simple moving average on the daily are now forms of resistance, followed by this 50-day simple moving average being in direct confluence with the gap top, which is very likely to come down to. Okay, so please watch your longs in COMS, as I do expect a further capitulation. If you have any questions or concerns, please reach out to me on Discord or Twitter. I'll make sure to leave those links in the description below. Please know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as a form of entertainment. Do your own DD and we'll be okay. All right, you guys, but I think this is a pretty good place for me to leave off the video. If you have any questions or concerns, remember, Twitter or Discord. I'm not in WhatsApp or Instagram or any of those other places where there are imposters of ARCa. Okay, I'm not gonna ask you for your, I'm not gonna ask you, or I'm sorry, I'm not gonna message you first. Okay, so please know that I will not message you first. All right, well, yeah, that would be it for the video tonight, you guys. And I wish you well. I wish you a very good night, and I will catch you at the bell mañana. Adios.